Always consider using down markets to trade less, and more importantly, to learn/study the best times to aggressively re-enter the market while avoiding the bulk of any bearish move. Educate yourself. Get inspired. You can do this. I have kept it simple. And we are going to go back and start almost 120 years ago, almost 70 years before the RSI was invented, and we're going to be using the Dow. And this method is still applicable for all trading markets, stocks, forex, cryptos, in other words, any trading instrument. After almost a 45% drop from 1901 to late 1903, the market went sideways for a couple of months. Traders were not sure if the market was gonna recover and move higher, or if the market was gonna break down further and continue going down. This method is gonna help us re-enter the market if we suspect there's gonna be a strong recovery after major market lows and after a market crash. The method is simple. Determine the highest close on whatever time frame you are using. It is very important that you understand that this close needs to be an all-time high close for this method to work. Now, draw what I call a primary trend line connecting previous highs of the RSI, and the very moment you move above the primary trend line, that moment is your indication visually that there is a high likelihood that the market could be preparing for a very strong recovery. In this case, this is what happened afterwards. After another bear market move that lasted almost 2 years, signifying why we should always be very patient. Again, the market went sideways for a few months, giving traders and investors a choice as to whether to expect a strong recovery after that bear market move or a continuation of the bear market. And this is where this method becomes very useful. Using this all-time monthly closing high in this example, remember it works for all time frames, but the closing high is important. We draw a trend line right there. And once we clear that trend line, the indication is that there's a likelihood that we are now in a new bull market phase. And this is what happened afterwards. 8 months after World War I began, this is what the charts looked like. And we can guess the headlines at the time. So one could have expected either resistance on this line to take things down, or surprisingly, a breakout would mean that the market in the middle of a world war would actually be moving markets or the Dow to fresh high ground. If we go forward, you see we actually get a breakout, which meant this was a buy situation, irrespective of the news of the day. Fast forward 2 months later, we can see the breakout and a retest. By the way, a pro tip, the retest is also a buy signal, and this is what happened afterwards. Now take a look at this major breakout in late 1924, and again the pro tip, with your line extension you get additional re-entry or areas where institutions and investors can add on to their positions before and on the way to this massive run into late 1929, and then the infamous market crash of 1929 as this trend line broke in October, November of 1929. And then this happened. This was a serious bear market, down about 90% over a course of 3.5 years. And again, not knowing whether the market was going to make fresh lows here, the best thing to have done, as we have learned, is wait for the RSI to move above the primary trend line as a sign of potential market recovery of those major bear market lows in 1933. And as we now know, the market never looked back after those major lows. After a young index in the way of the Nasdaq made this big drop, it gave this signal here in early 1975 and essentially never looked back since that time period. Remember, I have discussed this method publicly for many years. Links are going to be in the description. Here we see Ethereum in late 2020 giving this primary trend line breakout and a buy signal on its way from 500 to 4,300 in 7 months.